let's talk about another player in the Bakken region. That's Hess Corporation, ticker HES. And Hess, they have some plays going on in the Bakken. They're also involved in Guyana. They partnered with Exxon to drill one of the largest offshore discoveries in recent memory there. Do you want to talk about what's going on with Hess and what's going on in the Bakken with them and how the Bakken fits into their overall strategy for the business?
Yeah, so Hess has been an interesting name. They've really reshaped their portfolio the past couple of years. They sold off a lot of different things. They sold off their Utica Shale stuff. They sold off a lot of international plays, but they've kept what they think are the best. And in their case, it's the Bakken, which Hess is one of the better drillers out there. They have a manufacturing process that they've taken towards it, where they're drilling wells focused on cutting costs and really manufacturing oil out there by drilling wells that they have a high probability of delivering certain production growth rates and certain returns. So they're using those two things, Bakken and Guyana, as like the growth engines of the company. They think that they can grow production, Bakken at a 15 to 20% compound annual growth rate through 2021. And they've got enough inventory to drill for about 15 years at $60 oil, higher oil prices that frees up some more inventory. So there's plenty of growth out there. They just added another rig earlier this year. They plan on adding another rig. So lots of growth out in the Bakken, and that will help them in the near term while they and ExxonMobil ramp up this Guyana find, which is just truly amazing. It's got just loads and loads of oil, low-cost oil out there. And so Hess sees that as being the next growth driver, probably 2021, 2020, when that'll come online. And they think that they can grow cash flow at a 10% compound annual rate for years to come. I'm sorry, that's production. Cash flow, 25%. So these two plays, they're so high margin, they'll produce so much money. So Hess, between these two, could be a really great long-term oil company because they can do it at $60 a barrel. So really interesting long-term name.
Yeah, and let's talk a little bit more about in Guyana, Hess's partnership with Exxon. That relationship there where Exxon is the operator there, how advantageous is that for Hess? I mean, that's got to be a great resource to have partnering with such a large oil player like Exxon.
Yeah, Exxon's one of the better companies in the business at drilling for returns. They've been phenomenal over the years of some of the industry metrics like returns on capital employed. And because they're so focused on returns, that's what benefits Hess here, because Exxon will invest in this play because it's going to produce long-term returns and very good returns. Exxon sees this as being one of the key drivers, along with the Permian, of enabling it to double earnings by 2025, which for a company the size of Exxon, that's a huge, huge, growth potential. So for them to partner with Hess or for Hess to be a partner on this, it's really a great deal for Hess, I think, because Exxon just knows how to drill, knows how to produce oil. So I like Hess specifically because of the Bakken, but you add the two together and it's a really nice company to follow.
Exactly. And when you look at management's, presentations, they talk about, too, that Guyana and the Bakken are kind of their growth drivers, but they have some other plays that are more of their cash flow drivers that they use to kind of feed those growth engines. And that's their assets in Malaysia and the Deepwater Gulf of Mexico. They're saying that those plays are getting them 70% of the cash from operations through 2020, but only 20% of their capex. So these are things that don't require a lot of capex to keep throwing off cash, but they can really use those other assets that they have to generate cash to really invest in those big growth drivers, like you mentioned, in Guyana and the Bakken.
Right, and that's something that investors should look at when they're looking at oil companies. Some are like Continental; they're just focused on shale plays. So these they pump in a lot of money up front, and they produce really fast. Then there's longer term things like offshore oil sands, LNG. They take up a lot of money up front and take years before they come online, but then they produce lots of cash and production for years to come. So that's what Guyana will be. It's a large upfront investment, but in the future, it'll turn out to be like Malaysia, like the Gulf of Mexico, where it can produce cash flow for years to come with little long-term investment. So that's why another reason why I like Hess over a company such as Continental, because it does have these cash flow drivers, so it'll make more steady income over the years. It kind of reduces the risk for, if oil prices were to collapse again, then we'd see the Bakken shale probably not grow as fast, which would hurt Continental, but it probably wouldn't hurt Hess's long-term growth plans.
Sure. And then we wanted to mention too, for folks that are income investors, Hess also has a midstream entity that you can buy shares in, has a 6% yield, has been growing their distribution at 15%. If strong financials, no debt. You want to talk about what opportunity that Hess midstream vehicle might be for more income-focused investors?
Yeah, so if investors don't want to be exposed to oil prices, Hess midstream is an interesting way to play the Bakken without having that exposure to oil prices. It basically builds gathering pipelines, which are needed to hook oil and gas wells to the country's midstream pipeline system. So it helps Hess to be able to get this production to customers, and it's basically like a toll booth, and they just collect steady cash flow as these volumes flow through. So they're able to take that cash flow, reinvest some of it into building more pipelines, more processing facilities, that sort of thing, and then distributing it to shareholders. And 6% in today's environment is pretty good, and it's a very safe 6%. They have no debt. They cover their dividend very well with cash flow, and they have lots of growth ahead because they're helping Hess with Hess growing its production 15% plus. That those volumes will flow through Shell Midstream's pipelines, generating cash flow. So they think they can grow that distribution by about 15% a year for the foreseeable future. Add in the potential to help third parties out, and I think it's a really interesting way to play the Bakken without getting all that exposure to oil.